Good morning, everyone. Welcome to my YouTube channel. This is Gisrael H. Raz, your instructor for today. So today we'll discuss the second lesson of this course, and that is tax administration. So at the end of this lesson, you will be able to, number one, identify the various government agencies enforcing the tax law and the collection of our taxes. And second, you'll be able to visualize the overall structure of the primary tax collecting agent of the government, that is, the Bureau of Internal Revenue. And third, you will be able to evaluate the powers of the Commissioner of Internal Revenue and, of course, gain insights on how assessments are done. So, if you're ready, let's start. So, the Department of Finance is principally responsible for the fiscal policies and the general management of the government's financial resources. It has the executive supervision and control of the following agencies. So these agencies are under the management and supervision of the Department of Finance. First, we have, of course, the Bureau of Internal Revenue, who is primarily responsible to assess and collect all national taxes and charges imposed by the National Internal Revenue Code, or the NIRC, and other tax laws and regulations. So BAR, or the Bureau of Internal Revenue, is actually the one enforcing and collecting national taxes such as income taxes, the value-added taxes, the percentage taxes, and so on. So it's the sole responsibility of the BAR. Second, we have the Bureau of Customs and Tariff Commission, which is tasked to enforce the Tariff and Customs Code, the TCC. The Bureau of Customs and Tariff Commission also collects taxes on imports embodied in the NIRC. So, in the Philippines, our tax code is embodied in the National Internal Revenue Code, and this law or code is enforced or implemented by these two government agencies, the BAR and the Bureau of Customs and Tariff Commission, who are under the Department of Finance. So, the Land Transportation Office, the third government agency under Department of Finance, is also responsible to collect registration fees and motor vehicle tax. And of course, there are duly and lawfully authorized collectors, persons, agencies, or duly accredited banks authorized by the BR, Bureau of Customs, and Tariff Commission, and Land Transportation Office to collect these taxes. So, again, these authorized collectors, such as banks, are only responsible for the collection. However, as to assessment, as to the implementation of the law, these are sole responsibility of the BAR and the Bureau of Customs, as mentioned earlier. We also have the local offices in charge to enforce local taxation. So, again, BAR, or the Bureau of Customs, Bureau of Internal Revenue, is responsible in the enforcement of national tax, such as income tax, estate tax, donors tax, and etc. But for local taxation, the local offices, the local government units are responsible for the collection of local taxes. This includes the provincial treasurers, city and municipal treasurers, provincial and city assessors, Provincial and City Board of Assessment Appeals, and the Central Board of Assessment Appeals. So, now let's focus our discussion on the Bureau of Internal Revenue alone, since our course, Income Taxation, is solely focused on the national tax, which is the income tax. So, we will focus our discussion throughout this lesson on the Bureau of Internal Revenue. So, let's have first its organization and composition. So, the Bureau of Internal Revenue shall be under the supervision and control of the Department of Finance. Its powers and duties shall comprehend the following. First, the assessment of all national internal revenue taxes. Again, as I have discussed earlier, the BR, the Bureau of Internal Revenue, is responsible for the assessment, meaning the computation of correct taxes of all national internal revenue taxes. So these can be income tax and so on. Aside from the assessment, it is also responsible to collect these taxes. So basically, these are the two functions and duties of the Bureau of Internal Revenue: to assess and to collect national internal revenue taxes. And of course, in case of non-payment of taxes, for example, a certain taxpayer failed to pay a tax, then the BR will have the responsibility or power to enforce the collection through forfeitures of properties or imposition of penalties or fines. Okay, so again, these are the three duties of the BAR. So we also have the execution of judgment in all cases decided in its favor by the Court of Tax Appeal. So there are certainties wherein there will be disputes between the taxpayer and the BAR. And then there are also instances wherein the court will favor the BAR. In such case, the BAR will have to execute, meaning to enforce the judgment by the court. So, for example, if the court favored to say the BAR has to collect, the BAR is right and has to collect this amount, then the BAR will do so. Okay? So, the Bureau of Internal Revenue is divided into first, the national office, and of course, second, the field offices, which are the regional offices. The national office has the general direction, guidance, and control of the entire operations. So, for the entire operations in the entire Philippines, the national office is responsible for that. While the field offices execute and implement the national policies and programs prescribed by the national offices. National office rather. So, let us discuss more on the national office of the BAR. So the national office consists of first, the commissioner; second, six deputy commissioners, four under the section 3 of the NRC and two under the executive order, 430 by the former president Gloria Macapagal Arroyo, and also the 14 assistant commissioners. These 14 assistant commissioners assist the deputy commissioners. So this one commissioner, six deputy commissioner, and 14 assistant commissioners, a total of 21 officers in the national office, have the general supervision of the entire bureau. So the commissioner has the or is in the top of the organizational structure of the BAR, as he said, and by the six deputy commissioners. And of course, these six deputy commissioners are also assisted by 14 assistant commissioners. The Commissioner of Internal Revenue is the chief executive of the Bureau as dictated or provided in the National Internal Revenue Code, Section 3. So, this or he is appointed by the President of the Philippines upon recommendation of the Secretary of Finance. So, today we have Commissioner Cesar Dulay. So, he was appointed by President Duterte in 2016, I think, or 2017. So, anyway, he formulates the policies and administers the activities of the Bureau. Take note that the CAR is not responsible for making tax law because, again, in our discussion in the general principles, the taxation power is solely vested on the legislative body of the government. So the CAR or the commissioner has the responsibility or power or authority to interpret this tax law and formulate policies to implement this law. The CAR is also given full authority in matters of discipline and appointment of internal revenue personnel. And of course, the CAR may make necessary rules and regulations needed to delineate the authority and responsibility of the various groups and services of the Bureau. While the deputies and assistant commissioners, they assist the commissioner in supervising the administrative and operational activities of the bureau. They are appointed again by the President of the Philippines and upon recommendation of the commissioner himself and with the approval of the Secretary of Finance. So if you imagine this, the commissioner is appointed by the president, and then the commissioner will have to recommend to the president these deputy and assistant commissioners. And this recommendation must be first approved by the Secretary of Finance before the president can appoint them in their position. The bureau shall be composed of the following groups in the offices. So again, we're still talking of the national office. First, the office of the commissioner. Second, resource management group. We have legal inspection group, operations group, information system. Okay, so we are now in the field offices. We're done discussing the national office. So the Philippines has been divided into regional offices or ROs, which directly execute and implement the national office policies and programs prescribed by the national office for the enforcement of the internal revenue taxes. As I have said, the national office is not responsible for the field implementation of its policies or programs or whatever. The national office is solely for the supervision and governance of these regional office. So, meanwhile, the regional offices are responsible for the execution and implementation of these policies and programs prescribed by the national office. So, a regional office covers several provinces, including cities. Each regional office is responsible for directing and coordinating the operation of the following divisions. So, again, a regional office is not just one office in one city, but it covers several provinces or cities and have the following divisions. Number one, the assessment division. So this division is responsible for the computation of the proper taxes or appropriate taxes. There are some instances wherein the uh, return filed by the taxpayers are not correct. I mean, I'm not saying they're wrong, but there will be some instances wherein there is more accurate computation of a tax. No? So when a taxpayer has failed to file a tax return, or when the taxpayer filed a wrong return or has paid a wrong amount of tax, this division will have to compute the tax for themselves and assess the taxpayers for penalties, of course. So that's the function of the assessment division. We also have the human resource division, of course. This division has the responsibility of governing its human resources. We have the collection division, the finance division, the monitoring division, the admin divisions, and of course, we have the legal division. In case when the taxpayer disputes or protests the assessment, or when the taxpayer feels that he is correct and the BIR is wrong, then there will be instances wherein the case will have to be shifted from the admin level to a court level. So that's where the legal division will come in. So each regional office is headed by an RD or a regional director. And the RD or regional director administers and enforces internal revenue laws and regulations within his assigned regional area in conformity with the delegation of authority from the commissioner. Why we have to emphasize conformity with delegation? Because again, in the tax code, in the National Internal Revenue Tax, the responsibility or the authority or the power to issue assessment solely rests on the commissioner. However, the commissioner may delegate this authority to his subordinates, which includes the regional director. So again, the regional director has to uh, comply, or has to conform rather, the authority given to him by the commissioner. Otherwise, it would be a violation or of the authority given to him. So, for example, if the commissioner is only given this certain director specific power or authority, but has lapsed or has done something beyond the authority given to him, then that director may be liable or responsible for the violation or excess power. Uh, Second, this director is assisted by the Assistant Regional Director or the ARD. So, under the regional offices are the revenue district offices. So, these RDOs headed by the revenue district officers. So, as I have said, the regional offices cover several provinces or cities. So, since it will be impossible for the regional offices to monitor every province, no? So this specific region will have to create a branch or a sub office, and that is a revenue district office. For example, in Butuan, we have RDO 105, no, RDO 103 rather, and then in Surigao, we have RDO 105. And this RDO or revenue district office are under or is under the direct supervision and control of the regional director. So the revenue district offices implement programs, methods, and procedures necessary for the efficient, effective, and economical assessment and collection of all revenue taxes. So again, these revenue district offices are responsible for the field work, for the uh, field operation of the entire bureau. Each of the revenue district office is composed of fieldmen. So we have fieldmen and examiners performing assessment work. So those BR agents we see so as having surveillance or conducting surveillance with some taxpayers or you know in establishments. So these are fieldmen, these are examiners. They are performing the assessment work. And after the assessment, if it is settled, then we have the collection agents and clerks to perform the collection work. So they are the personnel having direct contact in dealing with the taxpayers. So let us show you the entire overview of the org structure of the Bureau of Internal Revenue. We will begin with the National Office. So the National Office is under the supervision and control of the Commissioner of Internal Revenue, who is appointed by the President of the Philippines. So the Commissioner is assisted by six Deputy Commissioners, who are also appointed by the President. But these six Deputy Commissioners were recommended by the Commissioner himself and approved by the Secretary of Finance, the Department of Finance. So these six deputy commissioners are also further assisted by 14 assistant commissioners. So again, the national office is under the supervision and control of these 21 persons: the commissioner, the six deputy commissioners, and the four assistant commissioners. And among these three categories or positions of individuals here, the commissioner has the highest responsibility or position or power in the entire Bureau of Internal Revenue. Under national office, we also have the regional offices. Again, a regional office is composed with several provinces or cities and then this regional office or a regional office is supervised and controlled by a regional director. A regional director is also under the control and supervision of the commissioner. So again, the commissioner has the highest power among them. While these regional directors are assisted by assistant regional directors or ARD. Meanwhile, the regional offices are also divided further or subdivided further into field offices, and these are revenue district offices. For example, in a region, in one region there can be two or three or four or more revenue district offices. So these revenue district offices are responsible for the field work, for the assessment, for the collection. They are responsible for uh, the implementation and execution of the entire of the tax code. So the revenue district office is governed by a revenue district officers or RDO. And then this RDO is also under the supervision of the regional directors. And then these RDO are assisted or um, assisted by the fieldmen and examiners, also the collection agents and the clerks. So if you'll notice, there are many positions in the BR. There are commissioners, deputy commissioners, regional directors, and so on. But among these people, the highest power, as provided in the tax code, the NIRC, is vested on the commissioner himself, because it is only he that is being given the power, the full authority to collect, to assess and collect taxes. However, this commissioner can delegate his power to the lower position levels. Okay? So the authority and powers of the commissioner, as I have said earlier, the commissioner has the highest power or responsibility among all those people listed. So there are only few authority and powers of the commissioner as provided in the law. Number one, to interpret tax laws and to decide tax cases. So that is under the Section 4 of the National Internal Revenue Code. So the tax code gives power to the commissioner to interpret tax laws. It is said that once a tax bill, as we have discussed in our general principles, becomes a law, the first person who will interpret such law will be the commissioner. Why? Because it is the commissioner who will have to execute, to implement this law. Okay? For example, in 2018, January 2018, the Tax Reform and Inclusion Law, or the TRAIN law, was effected. And then it was first time. So the power to interpret the law, the tax law, was granted to the commissioner. Okay? So after reading the tax law, after reading the law, the commissioner will have to write or draft regulations or interpretations on how he will implement this law. And then later, after the drafting, he will have to submit to the Secretary of Finance, because again, the commissioner is under the supervision of the Department of Finance. Who, if the Department of Finance, the Secretary of Finance will accept and approve these interpretations, he will have to recommend these interpretations to the President. The President, who is part of the executive branch of the government. After the President read the interpretation and or the regulations or rulings or whatever, he will have to approve. So once this is approved, the interpretations are approved, then it will now be the time to implement or execute the interpretations. Okay? So there is a lot of process in taxation. But always remember, the first person to interpret the law, the tax law, will be the commissioner. Now, question would be, how about the court? What will happen to the court? Okay, so the court will only step in when there will be disputes that can't be settled in the BR level. For example, a certain taxpayer was assessed. Let's say the taxpayer was assessed to pay, let's say, 10 million pesos. And then the taxpayer protests because he believed that it is unjust, because he had faithfully complied with the tax law. And then the case, the dispute, the protest was not settled in the BR level. Therefore, the court will now step in to decide whether who is the correct party, whether the BAR or the taxpayer. So again, that's the power of judicial review that is also on the part of the Supreme Court. Okay, so aside from the power to interpret, the commissioner is also given the power to obtain information and to someone examine and take testimony of persons. So in case the commissioner believes the taxpayer has wrongfully filed a return, then the commissioner has to do something, to do anything, just to get the information, the correct information, so that the law will be upheld. So, again, to obtain information, someone. However, again, this power can be delegated to the lower position, like the assistant or the RDO. Okay, so later I will explain which among these powers, which among the following powers can only be delegated or not. So the third, we have to make assessment, to compute the correct tax. Again, when I say assessment, this means computation of the correct tax. And to delegate the power. So the last would be to ensure that the provision and distribution of forms, receipts, certificates, and appliances and other acknowledgement of payment of taxes. So these are the five authority and powers of the commissioner. So among these five powers of the commissioner, the first one cannot be delegated to the lower positions. It is only the commissioner and no one ever can interpret tax law. Okay? However, the following four authorities or powers can be delegated to the lower position. I mean, the power to obtain information, to make assessment, to delegate power, to ensure the provision and distribution of forms, etc., etc. These powers or authorities may be delegated by the commissioner to the lower positions. Okay, so at this point, we will now discuss tax administration, which is about the manner or procedures of assessing and collecting or enforcing tax liabilities. So again, uh, the manner or procedures of assessing and collecting. So the administration is composed of the assessment and the collection of taxes. So when we say assessment, it means the computation of correct taxes. It means the audit of the taxpayer. Actually in the Philippines, our tax is self-assessing, meaning anyone can compute his own tax liability. Of course, if he know how to compute the tax liability. So, tax administration is composed only of two procedures, that is assessment and collection. However, we will discuss more of this detailed uh, in the tax remedies lesson. But this time we'll give you a brief overview of what an assessment is. An assessment is the official action of an officer authorized by law in ascertaining the amount of tax due under the law from a taxpayer. So again, the official action in ascertaining the amount of tax due, the correct tax. This action involves the computation of the tax due, the giving of notice to the taxpayer. It's either a preliminary assessment notice or a final assessment notice. Uh, Preliminary assessment notice is given when it is the first time that the officer will inform that the taxpayer has something to pay or there are discrepancies in the tax return filed. Okay, whereas the final assessment notice is a final assessment notice, which demands the, the taxpayer to pay the assessed amount. So as this assessment also involves the making of demand upon him for the payment of tax or deficiency. So normally, Normally, if it's the first time, I mean, if it's the first time to inform the taxpayer has done something wrong or mistake in the computation of the tax, the PAN or the preliminary assessment notice will be given to him, informing him that he has failed or he has wrongfully or mistakenly filed his return. That's under the PAN, the preliminary assessment notice. And after protest, after thorough process, after due process, and the final computation is already there, it was really ascertained that the taxpayer has really mistakenly filed or wrongfully filed the return, then the final assessment notice will be given to him. Okay? The final assessment informing him that taxpayer, you really have to pay this amount. Okay? So actually the final assessment notice is coupled or partnered with a formal letter of demand. In a formal letter of demand, it's a letter containing the formal demand. It contains a demand for the taxpayer to pay that amount being computed. Assessments are always presumed to be done in pursuant with the law, making it legally valid and enforceable against the taxpayer unless the taxpayer protests. So when the fieldman or the BR examiner has computed or has issued the assessment, let's say the PAN or the final assessment notice, it is always assumed that the computation is correct and in pursuant with the law, the tax law, unless the taxpayer protests with such assessment. In such case, the taxpayer has to submit a protest letter and, of course, documents to support his claim. The burden of proving the illegality of any assessment, as the case may be, shall rest upon the taxpayer. So when the taxpayer disputes or protests that he is correct and the examiner is wrong, then it is in on him to the burden of proving that the illegality or the wrongful assessment rests upon the taxpayer, which means the taxpayer has to provide evidence, to provide documents to support that he is correct and the examiner is wrong. Because again, it is always presumed that the assessment is computed or done in pursuant with the law. Failure to file a return on the part of the taxpayer shall not prevent the commissioner from authorizing the examination of the taxpayer. Meaning to say, if the taxpayer has not filed any return, the commissioner can still issue an assessment. The commissioner can still authorize someone under him to examine the taxpayer, even if the taxpayer would say that he did not file any return. And the tax or any deficiency tax so assessed shall be paid upon notice and demand from the commissioner or his duly authorized representative. So for example, in the year 2019, the deadline for filing income tax return falls on April 15 rather, 2020. And then, for example, the taxpayer has failed to file a return. Okay? He has not filed any return, for example. So the BR can still assess the taxpayer who failed to file the return within 3 years. Okay? The BR can still the BR can still assess the correct tax and demand to the taxpayer to pay such tax within 3 years. Okay, so any return, statement, or declaration filed in any office authorized to receive the same shall not be withdrawn. So it is very clear that when a taxpayer submits a return or any statement or document, that cannot be withdrawn anytime, forever. Okay? Within 3 years from date of such filing, the same may be modified, changed, or amended, provided no notice for audit or investigation of such return, statement, or declaration has been actually served upon the taxpayer. So in this case, actually we'll discuss more of this in our succeeding topics, but in this case, for example, the BAR has actually 3 years to assess, meaning the buyer is given by the law a period of 3 years to make computations, to investigate, to audit the taxpayer whether the filing is correct or not. So if there is no investigation or audit yet, then the taxpayer can amend or change such return filed or modify the return filed. Okay, so under Revenue Regulation Dash 99, as amended by Revenue Regulation 18-2013, it provides that the commissioner or his duly authorized representative shall issue the preliminary assessment notice, final assessment notice, and the formal letter of demand, and of course, the final decision and disputed assessment. So, what are these things? So, if, for example, the commissioner believes that a taxpayer has wrongfully filed his return, then the commissioner will issue a preliminary assessment notice informing the taxpayer that the buyer will have to conduct an audit or investigation. After that, if after the audit investigation it was found out, for example, that the taxpayer has really done something wrong or a mistake in the computation of the tax, then it will inform the taxpayer that it has or he has a tax deficiency, which is contained in a final assessment notice. Okay? In a final assessment notice, it will say, taxpayer, you should pay this because according to this, you have underdeclared your sales or your income. Okay? Coupled with that fund, combined with that fund, is also the formal letter of demand. This letter of demand is actually a demand letter demanding payment from the taxpayer. Okay? It is during this time that the taxpayer can protest, meaning he can argue, he can dispute. No, 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 Bayer, I am correct and you're wrong. So, of course, he will have to prove that he is correct by submitting documents or proof or evidence that he is correct and the examiner is wrong. When it came to conclusion that the taxpayer is really wrong and the buyer is really correct, then the buyer will issue now the final decision on disputed assessment. Taxpayers shall submit their responses to the PAN and protest to the FAN FLD with the duly authorized representative of the commissioner who signed the PAN and the FAN FLD. So prior to the issuance of the PAN, the taxpayer may be allowed to make voluntary payments of probable deficiency, taxes, and penalties. So, for example, the taxpayer, for example, believes that he committed a mistake on his part, then he can voluntarily make payments. When the commissioner or his duly authorized representative finds the proper taxes should be assessed, he shall first notify the taxpayer of his findings through the issuance of the PAN. However, in some cases, the PAN is no longer necessary under the following circumstances. So there are 5 instances wherein the PAN is not necessary. So first, when the deficiency tax is a result of mathematical errors, or when a discrepancy has been determined between the tax withheld and the amount that actually remains. Also, when the taxpayer who opted to claim tax refund or tax credit of excess creditable withholding tax. Fourth, when the excise tax due on excisable articles has not been paid, because it is very clear you don't have to issue a PAN for that. The taxpayer knew already that he has a liability to pay, so no need to give or to inform the taxpayer because he know. So next, the fifth one is when an article locally purchased or imported by an exempt person has been sold traded, or transferred to an exempt person. So these are the five instances wherein the PAN is no longer needed. The commissioner may terminate the taxable period anytime by sending such decision to the taxpayer and demand immediate payment of the tax due thereon. So the commissioner can actually terminate, let's say, stop, taxpayer, you need to pay your tax now. You don't have to wait for December or for April 15 to come. You need to pay the tax now. Okay, the commissioner can do that in the following instances. First, when the taxpayer is retiring from business, subject to tax. Of course, when the taxpayer will stop or will cease from doing business, the commissioner cannot wait for April 15 or for December to come. The commissioner can now assess the taxpayer because he is retiring from business. Or when the taxpayer intends to leave the Philippines or remove his property therefrom or hide or conceal his property. Okay, so these are the cases wherein the commissioner can terminate the taxable year or taxable period. For example, if the taxpayer using calendar year, let's say for example January to December, and then he tried to conceal the property or tried to go abroad because of some wrongdoings. So the commissioner cannot wait for the taxpayer to go out of the Philippines. So the commissioner can issue directly immediately a notice informing that the taxable period is terminated and the assessment will follow. Or the taxpayer is performing any act tending to obstruct the proceedings for the collection of the tax for the past or the current quarter or so deficiency assessment. Deficiency means the amount by which a tax imposed by the law exceeds the amount as computed and shown in the return filed by the taxpayer. So for example, the taxpayer declared in his return rather, that he had a sale of 1 million. That is reflected in his sales. However, upon assessment, it was determined that the correct sales is actually 3 million. Okay? So there is an under declaration on the part of the taxpayer, an amount of 2 million. Therefore, this under declaration of sales will have a consequence resulting to a deficiency tax. A deficiency assessment made by the commissioner or any authorized subordinate officer after an examination and inspection of the taxpayer's return or records or after an independent investigation in which a deficiency is found. So again, this deficiency assessment is made by the commissioner. If no amount is shown as a tax due to the taxpayer on his return, or if no return was made by the taxpayer, then the amount as computed in pursuant of the law is the deficiency tax. So for example, if the taxpayer declares or declared rather on his income tax return that he has no income tax due, it's zero. Okay? It's zero because maybe he has excess expenses or whatever. He has no tax due. But later on, it was found out that the taxpayer has actually an income tax liability of, let's say, 100,000. Therefore, that 100,000, the additional liability, is considered the deficiency tax, which must be paid by the taxpayer. Aside from, of course, the penalties, the surcharges, the interest, of course, these will be paid all in all. Okay, so the deficiency tax is the amount that should have been correctly filed and paid. So, this lesson has come to an end, and I hope you learned a lot from this. So I hope to see you guys in our next lesson. Thank you for watching.